Japan, which seems rich, talented, successful, and so powerful, it's even the fourth largest economy in the world. Why can't Japan step out of the economic shadows? No matter how hard it tries, it keeps hitting the same pitfalls. Japan's GDP is still declining and may continue to fall. Why is it still so heavily affected by the United States? Why does the yen seem near collapse? Even though other countries grew and prospered after the war, Japan seems to be the only one left behind. Why is that? Is it because of Japanese culture? Is it the economic system, the education system, demographics? Or is it because of actions taken by other countries? In this video, we're going to dig deep into this topic, starting from the end of the war all the way up to the present day. What exactly happened in Japan that led to these 3 lost decades? Support this video by scanning the QR code, or help the Psy Money Monster channel by liking, sharing, and commenting to chat. What I'd love most is if you'd hit the subscribe button. That way, when the next video drops, we'll see each other again. You only need to click it once. Thank you. Ever since Japan was devastated by nuclear bombs during World War II, it wasn't just the country's cities and infrastructure that were destroyed. The devastation reached all the way to the people themselves, affecting both their bodies and spirits. That meant Japan had to start over from below zero. But it's the Japanese spirit itself that allowed the country to rise again with an incredible determination and drive. Japan was able to do this in a truly remarkable way. So even though the country lost the war, they were determined to make a comeback and thrive in the economic arena. If you look at the Nikkei stock market graph, it really tells the story of Japan's economy through the numbers. The market grew by 4,500% since 1950, after World War II ended, and peaked in 1989 at around 39,000 points. Japan's GDP also saw explosive growth from 1960 onward, with double-digit increases, growing by 10%. In 1970, it grew by 6%, and in 1980, it grew by 5%. Japan's prosperity back then was so remarkable that even the #1 country in the world had to take notice and say, wow, is Japan really growing this much? Japan's growth reached the point where it was considered a global superpower, second only to the United States. There was a lot of talk at the time that, honestly, Japan's economy back could have even surpassed the economy of America. And so Japan witnessed the emergence of a group of financial powerhouses that would generate an incredible amount of wealth for the country, known as the Keiretsu. At that time, no one could have imagined that the Keiretsu, which would generate enormous wealth for Japan, would actually become a trap, specifically the trap of printing money and borrowing. The key product that Japan fought hard to dominate, believing it would make the country a global superpower, was the automotive industry. And Japan's #1 competitor was the United States. Japan held a grudge since World War II, especially after the US dropped nuclear bombs. After losing, the only way to fight back was economically, so they built up their auto industry. They eventually produced cars that were cheaper and better quality than those in the US. That's how Toyota was born. Toyota became the spearhead of the economy, a giant in the Japanese economic landscape known as the Keiretsu. Exactly. The Japanese government granted enormous privileges to the Keiretsu groups to guarantee that they could expand their investments both domestically and internationally, and then repatriate those funds back into Japan. That is precisely how they supported them. They gave out loans, offered low-interest loans, or even directly injected money. And where did they get the money to inject? They just printed it. The money they printed wasn't just used to support the Keiretsu groups, but also to stimulate the economy. Do you know what this is called? It's capital that can be created in any amount, and it's called an infinite stream of cash, a limitless cash flow. At that time, when they first started doing this, it actually worked well. It really stimulated the economy, and it was truly effective. Japan's economy genuinely grew. Industries like automobiles and all sorts of electronics expanded to the point where they dominated the world. Back then, the BOJ, the Bank of Japan, implemented this economic policy by simply printing money and making it easy to get loans with very low interest rates. Anyone who wanted a loan could get one. They didn't really think too much about it. They just approved the loans. Because the economy was growing so quickly from all the money printing, it led the economy to face the next trap, which is called the currency trap. When the economy grows really fast, the yen appreciates just as quickly. Ever since the end of the war, Japan's economy, which, as I mentioned, grew at an incredible rate, like 4,500% or something, caused the Japanese currency to strengthen rapidly as well. And when the currency gets stronger, what happens? It becomes harder to sell Japanese products abroad because Japanese goods become expensive due to the strong yen. So for a country like Japan that relies heavily on exports, like cars, electronics, and all sorts of products, Japan started to experience what's called stagnating growth. The economy was still growing, but it was slow and sluggish, not really satisfying. At that time, there was a conspiracy theory called the Plaza Accord. The United States arranged a meeting with the G5 countries, and Japan was one of them. They got together to negotiate trade and currency matters, right? In that meeting, not only did Japan not benefit, but it also ended up being the only country whose currency appreciated significantly, while the other four countries in the G5, their currency stayed pretty normal. They didn't appreciate as much. So the first thing that happened was Japan started running a trade deficit with the United States because its currency was the only one that got stronger. And since Japan's currency was the only one that appreciated, Japan also started running trade deficits with other countries as well. At that time, with the yen so strong, exports became a problem. The next trap Japan fell into was the money printing trap. The economy was in trouble, but the Bank of Japan, or BOJ, already had a simple solution for this kind of problem. Their standard approach was just to print more money and inject it into the system. So when they pumped a lot of money in, what happened? Inflation. And where did all that money go? It flowed into assets. That's why, at the time, asset prices shot up rapidly. From 1986 to 1991, real estate and stock market prices in Japan soared. It was really extreme. Nowadays, we'd call that a bubble. And when a bubble forms, what comes next? The bubble burst. And after the bubble bursts, what everyone inevitably faces is a brutal bear market. When the Japanese market started to decline, people thought, oh, it's probably just a typical correction, nothing out of the ordinary. But honestly, it was anything but normal. They called it a severe downturn, a real storm. Back then, the Nikkei hit its peak at 39,000 points in 1989. And right after it hit that peak, just 4 months later, it dropped 30% right away. People thought a 30% drop is a lot, that should be enough. But it kept falling. By 1992, it was down 60%. And then it plunged even further, hitting an 80% loss by 2003. People figured an 80% drop, this must be rock bottom, right? But as for the Nikkei, just when it looked like it might finally recover, you could say it was just bad luck. Because in 2007 and 2008, the global financial crisis happened, the hamburger crisis. That caused the Japanese stock market, the Nikkei, to crash even further. It hit rock bottom, dropping all the way down to 7,500 points. Remember, it started at 30,009 and fell to just 7,500. When the stock market completely collapsed, it was like the tide going out and exposing everything underneath. All the problems came to light: stock manipulation, corruption in the stock exchange, bribery, everything was exposed. There was a massive amount of borrowing because loans were so easy to get. That's why when everything was exposed, it became clear that all these companies that had borrowed huge sums without any real screening just didn't have the ability to pay back their debts. This led to the rise of what are called zombie companies. After 1990, many people referred to this era in Japan as the lost decade. And what's even worse is that it wasn't just the economy that was lost, but it was also the spirit and confidence of millions of people that were lost. Japan's economy was extremely difficult to revive at that time because about 15 million people, or roughly 15% of the Japanese population, became what's called the lost generation. That lost generation from then until now would be in their late 20s to late 30s, which should be their most productive years, the prime working age. But they ended up not working. Or if they did work, it was only part-time jobs, unstable jobs, or jobs without security. They had low incomes or lived with and were supported by parents. Some even became homeless, sleeping in internet cafes. Naturally, they didn't marry or have children. This lost generation of 15 million resulted from a hiring trap called shushoku katsudo, a Japanese cultural tradition. Students are expected to study hard so that when they graduate, they can seize job opportunities on Shikoku Katsudo Day, also known as Job Hunting Day. Major companies, especially those in the so-called Keiretsu groups, hold huge events where they set up booths to recruit and hire new graduates right on the spot. This is incredibly significant because for any student who lands a job at one of these events, it means stability, wealth, and basically their entire future. Until the day that student dies, that's how long it lasts. But the downside is, yes, if someone doesn't get a job at this event, it means they're basically left behind because Shikoku Katsudo is only held once a year. If you miss it this year, the next one is next year. But next year, they'll only accept new graduates, which means your whole life, after all your years of studying, you only get one shot, just this one day. But when Japan's economy went through the burst of the bubble, it was a real shock. The Keiretsu companies stopped participating in Shokoku Katsudo. They stopped hiring new graduates. At first, it was just for a year or two, but it didn't turn out that way. It ended up being 10 years that the Keiretsu didn't come out to hire new employees at Shokoku Katsudo, even though they were supposed to. Initially, it was because they needed to maintain the company's financial stability and keep their existing employees, since it was like, there was this kind of unwritten contract between the company and the employees that we would stay together until we parted ways. Basically, that we wouldn't leave each other, right? But in the end, those big companies and the Keiretsu couldn't keep that promise. Many companies had to lay off employees just to keep the company afloat. When those layoffs happened for the first time during that period, it really broke the spirit of the Japanese people. They used to believe that if you studied hard and seized the opportunity on Shikoku Katsudo Day, joining a Keiretsu, we expected lifelong job security. I was ready to give them my whole life, but in the end, they just laid me off. That shattered everything. This completely changed Japanese society because everyone's values shifted. Kids started thinking, if things are like this, why study hard? Why even try when after graduation we might not get into a big company? Or even if we do, it doesn't mean life meant devoting everything to your company. After that, a trend started. Many took unstable part-time jobs just to get by. Others lived with parents, stayed single, and felt no sense of purpose. This led to the lost generation, affecting 15 million people. That's why it's called the tragedy of the lost generation, affecting those then in their 30s and 40s. This so-called productive generation ended up not working, without homes, without children, and without stable incomes. And then Japan fully entered the era of an aging society. This is another trap that Japan has fallen into, known as a super aging society. If you look at the population pyramid, you'll see that Japan's pyramid is extremely narrow, and the majority of the population is now elderly. And if you look at Japan's population growth rate, you'll see that it's declining. It keeps dropping, and it's projected to decrease by almost half by the year 2100. That's why the working age population, which is already quite limited, has to work and pay taxes to fund welfare for the elderly. And the Japanese government, which has been consistently pouring massive amounts of funding into the system, has to allocate a significant portion of that money to welfare for the aging population. If this population trend continues, there's a strong likelihood that Japan's economy will continue to steadily contract. And the next trap that Japan faces is it's the trap where people refuse to spend money. That's why Japan's economy was stagnant for quite a while. Remember that? Japanese people have been through a lot: wars, economic collapse, personal hardships, and the breakdown of stability and trust in social welfare. All of this led to a sense of insecurity. So people couldn't earn much money, and even if it was just a little, they wouldn't spend it. They saved everything. That's why, for a period, Japan became the country with the highest savings rate in the world. This behavior isn't good for the economy. It became a major concern for Japan because people were saving money but not spending it. When money doesn't circulate, the economy doesn't grow. Even as prices rose, people refused to spend, leaving less money in circulation and a sluggish economy. Japan even got stuck with high interest rates, eventually going negative, causing capital to flow out. Japan's negative rate policy began they only just started raising interest rates in 2024, which means Japan had negative interest rates for a really long time, about 20 years, but the GDP didn't really improve much. The Japanese government has pumped a lot of money into the economy. Ever since after COVID up until now, they've injected about 21 trillion yen, or around $140 billion, and they're about to approve a new stimulus package worth another $110 billion. This is all meant to stimulate the economy. But honestly, it hasn't really worked. What's happened instead is that Japan's public debt has just kept increasing. By 2023, Japan's public debt had reached as high as 263% of GDP, the highest in the world. The reason they've managed to get by without collapsing is because most of Japan's debt is domestic. In fact, 43% of Japan's debt is actually held by the Bank of Japan itself. The Bank of Japan itself is the creditor. At the time when Japan's debt ratio was at 263% of GDP, the BOJ didn't dare to raise interest rates. That's because if they raised interest rates by even 1%, Japan's debt would increase by another 2.63%. And 2.63% of GDP is a huge amount. Meanwhile, other countries, like the United States, had already raised their interest rates to 5%. That was one of the reasons why capital started flowing out of Japan. So money flowed out of Japan to countries with higher interest rates instead. At that time, clever hedge funds noticed, hey, Japan isn't raising interest rates, right? It's still at 0 to 1%. So they would borrow money from Japan and invest it in assets with higher interest rates. This is called the yen carry trade. And up until now, people estimate that the yen carry trade has used money from Japan for about 14 trillion US dollars, which is a huge amount. But it could actually be even more if these numbers are being understated or hidden in any way. When this happened, Japan had to become much more cautious because they realized they were the world's low interest rate lender. If Japan were to raise interest rates, it would have a global impact. For example, Black Monday a few months ago happened because the BOJ announced it would raise interest rates. As soon as the announcement was made, wow, the value of S&P stocks plummeted and shocked the whole world. The BOJ had to make a quick U-turn, almost not in time, basically saying, okay, we won't raise rates after all. But today, it seems like Japan isn't concerned about that point anymore because Japan's debt ratio is still high. It's come down a little, now at 230% of GDP. But Japan's interest rate is currently at 0.5%, which means it's already been raised 3 times. And within this December, the BOJ has signaled that they might raise interest rates again. But even here, it's still uncertain whether this rate hike will actually help Japan's economy. Looking at the yen, which keeps dropping and doesn't seem to have found a stopping point yet. And if we look back, in 2010, it seemed like Japan was ready to stand proudly on the world economic stage again. But suddenly, they ran into their first big competitor, South Korea. At that time, Samsung. Wow, their technology was super advanced. Chips, electronics, you name it. And on top of that, South Korea also had soft power with K-pop. Back then, J-pop was almost forgotten at one point. As for exports, after getting hit once by South Korea, Japan got hit even harder by a second blow from China because China suddenly became really strong in technology, especially EVs, which directly competed with Japan's #1 industry. They started taking away Japan's market share. Plus, Japan now faces trade barriers and tariffs from Donald Trump. Japan's top export, cars, has taken a huge hit, slashing revenue. This has decreased Japan's GDP, and projections show it might drop further next quarter. If this continues, Japan could officially enter a recession. That's why Japan's lost decade keeps extending from 10 to 20 years, and by 2010, Japan was still losing to competitors. Because of these external factors, Japan still hasn't been able to truly recover from its economic crisis. That's how it turned into 30 lost years.